Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to ask the question, is the dump over? Is it safe to buy? That's what I'm getting asked a lot lately. We're going to look to answer that and a whole lot more. Before we do that, smash the like button. That does help the channel get out to more people, as does your wonderful comments. Thank you so much. And of course, those who leave questions in the comment section, I do get back to those as soon as I am able to. However, if you'd like more immediate engagement and response with me, interaction with me, you can find me in the Discords. Where are the Discords? The information is below in the description of this video. You might need to click the more button underneath and it will pop out. And you have the Tribal Trades Discord, which is currently closed for signups, but you can join the waitlist there by just emailing the email that is listed below. I am going to be opening up for one-to-one trainings again soon. Also, there's many of you already on the waitlist. If you would like to get on that waitlist, you can also shoot me an email on the email list below. And of course, we've got the Stocks with Josh Discord, the OG Discord there. I've got my own Crowned Traders channel in there where I've got education, insights, resources, some of my trade setups, and of course, entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? And how could you not be with this kangaroo kind of market that we have at the moment? All right, so let's jump into some news. First of all, I like this chart here. Bitcoin supply and exchanges is shrinking because everybody was buying the dip. Or I was anyway. Worries about a premature Bitcoin bear market will stifle your participation in a bull market. So Rect Capital still thinks we're in a bull market, and so do I. I've given my lines in the sand, but is it time to buy? We notice here that in the great state of Texas, I don't know if I said that right, Texas, y'all, this could go ahead. So notice with intent for Wednesday, March 5th, meaning it could be voted on tomorrow. And then Howard Lutnick says the strategic Bitcoin reserve will be announced at the crypto summit. Other tokens will be treated positively but differently. So that will be interesting. Bullish for Bitcoin. Everybody is waiting. As you can see here, we've been a lot of people getting liquidated there. And I just feel the market makers are just moving the up and down and up and down again today. And we're just seeing all of this money taken out of the market. If you're using leverage, come learn how to do it correctly. In the Discords there, I will teach you how to make money on the way down and also on the way up. In fact, a great statement from one of the members of the Discord said they used to be fearful when the market was dropping. Now they're just greedy because they're able to take profits on the way down as well. Otherwise, you're only able to participate when the market goes up and make money when the market goes up. When you learn to make money on the way down, you unlock something in your financial skill set where you can actually make money regardless if the market is going sideways, up, or down. So check out and join us in the Discord there. Bitcoin is very correlated to global liquidity. 3 months lag there. So as you can see, the global liquidity went down. Bitcoin's been going down, but now global liquidity has been going up. And so we would expect some upside for Bitcoin there. Okay, so that's all the news for today. And we're going to look at the charts, and the charts are telling us that we have another big wick here. Wasn't enough that this one got filled or partially filled, but it's a less of a fill. And I would be happy if we had less of a drop down. So what I'm looking for here, obviously these are very bullish because that means there's a lot of buying pressure to the upside, especially when we hit these levels. You know, what did I say to you? I said if we lost the 90K region, we would come down and hit both the 200-day and the 200 EMA. That happened. We got back above it, and we got back up to around 94,000. And I said if we lost the 90K again, we would come back to the 200 EMA and the 200-day moving average. And that's exactly what happened. And now we're looking to reclaim this 90K level, this crucial 90K level where the 20 EMA on the weekly time frame is. That is the line we must get across, okay? Failure to do so, and we start creating a new range. Now, remember how I shared that we've mostly been sideways in this range between 90,000. I'm going to keep it real simple for you. 90,000 here when we broke above and created a range, and then we had lots of retests into it and held the line. We even had a couple of deviations to the upside above the range, and now we've had our first deviation to the downside. How long will this last, or will it become more than just a deviation, and will we create a new range? And if we were to do that, then the new range looks to be around about this 80K to 90K region, and we would trade down here in this range. And as long as we don't lose, remember my lines in the sand, the 50-week moving average, which has moved up just a touch, so we will move that up with it. The 50-week moving average currently at around 75,488, not exact there, but pretty close. As long as we hold, that's the line in the sand for continuation of the bull run from a historical perspective. When we've lost that weekly moving average, the 50, the bull market has been over. Okay, now we can come down and test it, maybe wick below it. Even the 50 EMA on the weekly time frame that is just above the Fibonacci here at 77,000, that usually can get retested. Hasn't yet. I thought we were going to, and even said that I would be surprised if we didn't retest it, because we did test that numerous times in the April and May 2021 drop. And we talked about yesterday how I felt this was more likely to be like the April-May crash early. And the big differences was, of course, in April and May of 2021, the market had pumped January, February, and March. The fall was greater, 53% for Bitcoin. You think this fall is severe. Altcoins have only fallen, the altcoin market total too has only fallen 40%. It fell 60% in April and May of 2021. But it also pumped up a whole lot more. And I think that's what's caught people off guard and brought fear, as this usually doesn't happen in February. February and March, bullish months, green months post-halving. Even the year of the halving, these are generally good months, green months. What is going on? And so this more likely is going to be the April and May. Now, obviously, if we lose this level here and begin to capitulate further down to the downside, I'm not talking about wicks that go down. I'm talking about multiple weekly closes below this level. Then the bull market is likely over, and we would change our tune and say, hey, this drop is going to be like November 2021, and we're going to capitulate for November, December, January, and then the bottom fell out of the market at that point. So that's something to keep an eye on there. But to the upside, look, we're holding the 200-day moving average and the 200 EM on the day. I bought at both these levels and at 78, just above. I had my bid, my cheeky bid, just above the 77, because I know they sometimes do that. They're expecting everybody to load up there, and I just put it in there, and I picked up a buy around that $78,000 level, just around there, 78,400 or 500 there. Okay, so we have got quite these areas historically have been good areas to collect Bitcoin. Over here, as you can see, the 200 EMA on the daily, usually in a bull market, it doesn't travel far from the 200 EMA on the daily. It can close below. It can even stay below for a number of weeks or so, but it doesn't travel far. And of course, it doesn't travel far when you have the 200 daily moving average there, the simple moving average there, just sitting below, adding some additional support and a Fibonacci level there. Okay, so the question is it safe to buy? Now, I've said that this is a trader's market. In January, I came on here and I gave everybody a warning about the meme coin space and the low cap market space, the highly speculative coins. And I told everybody that I was selling. People go, oh no, I can't believe you're selling your bonk and you're selling your other coins. I got rid of all of them. I went into cash, and then I bought and I rolled some into Ondo and Sui and Tau and Bitcoin at that time. And I also said at that time that I was going to have no hold bags. All my hold bags were over, and everything was a swing, a get in, and a get out. And so I converted my Sui hodl into a swing bag. All my other hodl bags were swing bags. Those two decisions, those two warnings I gave, have turned out to be absolutely right. Because number one, the meme coin market has been obliterated. And also the market as a whole, as a buy and hold market, has been obliterated. It is a trader's market at the moment. Does that mean that we can't buy some of these dips? Absolutely not. Obviously, for Bitcoin, I bought these dips, but what does that mean for altcoins? Is it safe to buy altcoins? Well, certainly it's safe to buy Bitcoin, in my opinion, at these levels at 80. I bought some at 82, I bought some more at 78, and I bought some there at 85, because historically it has been a good place to buy the dip. If you go back historically on the daily time frame for the 200 EMA on the daily, the last time the 200 EMA on the daily was tagged was back in November, and the price of Bitcoin was around $60,000. And then the previous time it was tagged was around $40,000. And then the previous time before that it was tagged was around 28 and then 22. So if you bought just the 200 EMA on the daily when it was tagged, you would have made significant gains. And this is why the 200 EMA on the daily is crucial in this bull run. So of course, yes, but the problem is that we're failing now to break above this crucial 90,700 level. You can see we came against it, and this is why I give you all these levels. Look at this level here, exactly tagged it, came up and has tagged it and has rejected from 90,700. Also there you can see the 20 EMA on the daily time frame is just a little bit higher. On the weekly time frame, obviously it is pretty much bang on that 90,700 or just below. And that's why it's been rejected at this level. We should actually add this to our charts. We're going to do this so you can see this clearly when I move between the charts there. And we can pop this moving average on here, try and get it as good as possible. I'd like to do the same color, showing you how to set up your charts here, or similar. Let's get that color in there. That's probably a little bit better. Make it a little thicker there. And then we just add a name to it and put the text in as the 20 EMA on the daily there. And we're going to click OK. So when we actually go to the daily time frame, you can see pretty much why it got stopped just short of the Fibonacci right there. And this is where the ability to set up charts properly and trade correctly and know where all your boundaries and your prices are is so important there. So this is really what we need to get above, break above that level. Of course, there you can see the 20 EMA. Sorry, that's the 20 EMA on the weekly. So I need to change that to, let's make sure we get that right. I know you're all shouting at me through your computers to tell me I got that wrong. I heard you and I changed that there. All right, let's look at the yellow brick road, because we're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And some of you were freaked out from the 6-month time frame below. All I'm doing is sharing all the different angles. It doesn't mean that we're going to go down there. The 6.21 billion at 61,000 there, the bull market's probably over, and then their ability to tag and for market makers to come up and take this stuff to the upside. So I do think those levels are going to get taken. Somebody asked me in the Discord if 109 was the top for this Bitcoin bull run. So if the top was already in, where would be the bear market? It would be in the 40Ks, in the 40,000s. That's where the bear market would be there, because that's where the 200 weekly moving average is, and that's where Bitcoin usually comes to in a bear market, and that's sitting around 40,000 at the moment. Obviously, it's moving up slowly. If we were on the way down, by the time it reached it, it would still be in the $40,000 region. So you can see that there is a lot of money to be taken there, and they can just take all of that. So they may leave it behind. They may leave it behind and go on up, and we may make a new all-time high in Bitcoin. I think that's what's going to happen. They may also we may go straight into a bear market, and we need to be prepared for either scenario, which is why it's a trader's market. Get into a trade. I'm either taking profit on that trade or I'm getting stopped out of that trade, rinse, repeat. Okay, and so that's the way it is for a trader's market. That way you're not going to get stuck holding your bags through a bear market. And I gave these warnings months ago that it was a trader's market. Josh and I talked about it numerous times and at great lengths, even on his YouTube channel, how it's a trader's market and it's not right now buy and hold market. Now, that doesn't mean that a buy that you make now you may not get stopped out for it. You may just keep riding it up for many months. So it's a trader's market essentially, because you may get fortunate and end up buying the bottom of this dip. And I did pick up some coins on that dip and I didn't get stopped out. So I'm still in those trades. However, I've moved my stop loss up and I've moved up so that if I get stopped out, I get stopped out and profit. I'm not going to let it come all the way back down to zero and then go into a negative is more what I'm wanting to communicate here. So you can see here, this could all get left behind, but at some point it's going to get taken later in the bear market, or maybe they'll come and get some of it now and really scare the pants off everybody and go down to these levels down here. You know, look, we could go down to even 69, 68. We could have a big wick down as long as we're not having closes below that 50-week moving average, which I identified at 75. So we could really go down for a week and wick down and then come all the way back up. Because in reality, if you look at this, this is incredible when you look at, if we go to the weekly time frame, we haven't even have a close under the 200 EMA on the daily, let alone had a weekly close under the 200 daily moving average, let alone even got down and tagged these lower levels down here. So people saying the bull market is over, please sit down. You can have your opportunity to stand up if we start to have some weekly closes below the 200 EMA on the daily, below the 200-day moving average, and particularly if we see a weekly close or multiple weekly closes under the 50-week moving. I've given you the line in the sand. And so in my opinion, based off the historical data and what we've seen in the past, Bitcoin has not been in a bear market. The bull market has not finished until we have fully lost the 50-week moving average. So is it safe to buy? Yes, it's safe to buy some coins with stop losses. We're giving those levels daily in the Discord. Some of those, both for stocks and for crypto, and some of those trades have worked out brilliantly. So if you're not in the Discord, what are you waiting for? The details are below. I'd love to see you in there. And of course, until the next episode, happy trading.